All right. Weekend is over. Back to work. Let's make some money this week. Boy, we get some big news coming tomorrow. CPI report tomorrow morning. Big inflation data. We get some beautiful charts tonight. Some great ranges on the tick charts here tonight. But I'll tell you, you put those two together. Big news tomorrow morning, range-bound markets here tonight, and we have the recipe for some fantastic trades tomorrow. It smells like traps. Both bull traps and bear traps are probably where the easy money is made tomorrow. And as always, I'm going to cover my favorite trades in the video tonight. I want to make sure you guys have a game plan to make some money with those traps on CPI Tuesday. And before we jump in and get the party going tonight, make sure you subscribe so you don't miss tomorrow night's video. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel, but enough of the intro, right? Let's get ready for Tuesday. I'm getting excited for CPI Tuesday. Now let's start first, as we always do. Let's start first with the 60-minute charts. The Nasdaq and the triple Qs. I get the Emini and the SPY. I like to use the 60-minute charts to plan my trades first, and then later on in the video, I'm going to drill down to some tick charts. Tick charts are what I like to use to time the perfect entry. So we'll start first on the big picture on the 60-minute, plan our trades first, and we'll drill down to some, we'll talk entry tactics on the tick charts as we go deeper into the video here tonight. What are the 60-minute charts telling us right now? You can see for yourself. We're very bullish right now, obviously, on the 60-minute, on the S&P and the SPY, the Nasdaq, and the triple Qs. But I'll tell you, we're starting to run into, we're running into major resistance levels up overhead. You know, everybody right now is waiting for those opportunities to buy those nice, deep pullbacks, right? Bull market into major resistance. Unless we see a real strong shot after tomorrow morning's news here, everybody trying to buy the dip right now. And if we play our cards right, there's probably money to make on the short off the highs as well as buying the dip as well. So again, we'll talk about this in more detail here in a moment, but I think there's ways to make money with bull traps for a short off the high and definitely some bear trap pullbacks here on our radar for tomorrow. We're going to cover here tonight on a very important video. Now, before we jump into the tick charts and talk about tactics, entry tactics for tomorrow, let's just double check the calendar for tomorrow. There are two things that you want to be aware of. The first one, of course, is that CPI report at 8:30 Eastern time. That is arguably the biggest news of the week this week and the biggest news for sure tomorrow as well. Remember, I'm not going to worry about what the news says tomorrow. I only care about how the market reacts to it. So I'm not going to worry about if it's higher or lower. That is irrelevant. All that matters tomorrow morning is in our trade room, we'll have a front row seat to watch how the market reacts to it. So be aware of that tomorrow. Then following that, very excited, Michael Barr speaks at 10 o'clock Eastern time. He is kind of the vice chairperson or vice chairman of the Fed, second in command to Jerome Powell. I would imagine he will be in the hot seat tomorrow at 10 o'clock after we know that CPI report at 8:30 Eastern time. Those are the two things I'm watching here for tomorrow. So keep it in mind, 8:30 Eastern time is the big news in the morning, and then I'll be looking forward to see what Michael Barr says tomorrow at the Fed once we know more about that inflation data. Let's get back to our charts though, because of course it's important to know when the news is, but the money is made on the charts, right? We don't trade the news, we trade reaction to the news. Let's now go over my favorite trades here now for tomorrow. We'll start off first on the E-mini and the SPY. We'll finish up tonight on the Nasdaq and the triple Qs here. Like I mentioned before in the introduction, we're very bullish right now. You can easily see that, but we're running into major levels of resistance up overhead. Everybody is looking for that nice deep pullback to buy low right now. And if we play our cards right, we'll probably find a way to short this thing off the high and then buy it back for that retest of that high. Let's talk about that because I think the best clues tonight are probably over on our tick charts. Now, first of all, this is a 7,000 tick chart. You'll see that listed there in the upper left-hand corner. And if you're watching for the first time right now, this is a default 21 EMA. It's one of the most important tools we use to find good trades each morning in our trade room. The most important clue right now on the tick charts right now is there's really two important clues. One is we have a bullish trading range. If you know my style of trading, you know how much I love range-bound markets. That's one very big clue. The second big clue is we're right there into that major resistance on the 60-minute. Now, whenever you have a bullish market into a trading range, there are really three pretty simple ways to make money in a bullish range like this. Our favorite way to do this is to buy off support levels underneath that trading range. There are three different entry setups we'll talk about tonight that we were ready for no matter what the market gives us to buy below that trading range. One of the three ways to trade a bull range is to buy basically bear traps at support underneath that trading range. The second way to do this is to trade what we call a breakout pullback. So if you think about that trading range, bull market up, a breakout pullback, right? We'll actually use the top of that trading range as an area of support. Now, there are also three different setups we'll talk about to trade that breakout pullback, both long and short. We're going to cover that tonight in the video. And then what my favorite way to trade a bull range like this is a fake out breakout. And again, with tomorrow being CPI Tuesday, a fake out breakout off of that high could be a very lucrative trade and one of the easiest money making trades we get all week. That's our third way to trade that. And remember, in this scenario, we got to be a bit careful, right? Because we're so bullish overall, but there's plenty of ways to make money on the fake out breakout. Now, what everybody wants right now is they want that deep pullback. And we'll talk about that in those three ways to trade it. We'll talk about that here in a moment. First things first, though, I want to talk about if the market goes higher here first. Let's start first with my favorite out of all of them, that third scenario, that fake out breakout off the high. If I want to short a bull market off resistance above a trading range, there is one simple pattern I'm going to look for, and that is what you call a bull trap. Now, there's two kind of basic ways to look for a bull trap. In my free video course, I talk about what's called a crown reversal. So if we end up going higher and the buyers begin to struggle to go higher, right? We know that breakout pullback is possible, but if we see the buyers going to struggle trying once, trying twice, if I start seeing a series of lower highs up here, look for that bull trap above that high, that nice strong signal, and back down again. That is a bull trap. We teach that pattern, of course, in the free video course. The key is that lower low in price, that trap above that prior high, and that strong, in this case, red signal candle closing firmly below the moving average. Now, that, of course, is what I call a crown reversal. A lot of times what happens is it will pop up and then shoot right back down and begin to grind as it goes lower. Remember, ranges love to rotate back and forth, so the amount we go up can be used down below as a target. And before we get there, remember to think about those bull traps. Draw a trend line off that low, find that channel off of that high, and then look left. And what I always do is I look for that first test off the high of that channel. You can see this is a slight variation of a bull trap. It's just the same thing though. A series of lower lows, a trap above that prior high. That's one of my favorite. We call those V-top, right? V-top or into a pop and grind channel lower. I have a ton of examples of those, right, in our free video course. So that is how we trade that fake out breakout going higher. And we know where the market wants to go, right? It wants to take out these lows. And later on in the video tonight, I'm going to talk about how we can use some bear traps down here to buy it right back up again, because you have to think that there's so many buyers who are waiting to get long off of that low. Now, one more thing, I want to talk about the breakout pullback. All right, there's kind of one kind of core fundamental thing you want to understand is that whenever we see a range breakout, usually the first leg is the measuring leg, and they're going to make a measured move. Now, measured moves, we talk a lot about measured moves in our free video course. So you should hopefully be familiar with that by now. But during that breakout, markets will usually take out a measured move and then begin to pull back, use the top of that trading range as support, and go back up and try to retest that high on the way higher. right? So think about that fundamental setup, right? It's the measured move going higher, the pullback, and the retest of that high. If you understand that basic fundamental principle, how breakouts work, then as we're going higher, I'm looking to buy as low as I possibly can because we don't want to buy high. I want to buy as low as we can. And to do that, we're going to use what we call a bear trap. We talked about bull traps to short a moment ago. This now is a bear trap. It's a higher high in price, right, and a trap below that low. That's the way I buy during that breakout going higher. And again, if they go up and they pull back and they struggle, we then look for that, again, the opposite direction, but same basic pattern setup off of that high. Now think about, again, there's that measured move, right? There's that measured move now. Once we take out that measured move, now let's trap in some of these rookies. We don't want to chase this thing now. Now think about that same crown reversal, right? Bulls once, bulls twice. Get that bull trap right now and short that sucker back down again. Once we get that move back down, remember, bull market overall, breakout pullback off that high. Let's trap those bears in now with what I call a two-try failure pattern. Use those stops, right? Use those stops to squeeze this thing back up and retest that high. Again, it's a bear trap during the breakout. It's a crown reversal to short off that measured move. And just one of the easiest ways to make money is that breakout pullback. We're not going to pick that bottom. We trap those bears in, right? We trap those bears in, let them try a couple times and snap it right back up to retest those highs. Now, if you're watching for the first time right now, this might be all brand new to you, right? Bear traps and bull traps and crown reversals and failures. I know that most of you guys have learned all these already, but if you're here for the first time right now, I teach all of these entry tactics, and I've got hundreds of examples of these all put together in our free video classes on our website. I'll put a link up there for you quickly. Upper right-hand corner, grab that link, take that free trading course, because the strategy you'll learn in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day. And then once we know where to find the winners, I'll teach you 4 of my favorite entry patterns to help kickstart you making money each day. The markets are way too good not to be doing well with this right now. If you're not making the money you want, if you're tired of missing the best trades each day, hit that link that popped up there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. And also be aware too, if for some reason you can't get that link that popped up there, I'll put all the important links for you down in the description of the YouTube video. I'll put the free class links, our trade room access links, and I'll also put, I post a lot of stuff all week on Twitter. I post a lot of updates on Twitter each week. I'll put my Twitter feed down there as well if you want to follow along outside of these YouTube videos. All right, guys. So now we know, right? So now we know how to trade that fake out breakout. We know the basic principles of trading that breakout pullback. Now, let's face it. One kind of variation of this I want to make sure I'm ready for. Sometimes what happens is sometimes we'll see that move up. We'll get that bear trap. It'll run all the way up and get that measured move, right? We'll take our profit. We'll get that crown reversal, 1, 2, crown reversal back down. But instead of getting the bears coming in, instead of going in and getting the bears once, twice, and that shot back up again, sometimes what happens is sometimes the rug gets pulled out underneath these moves. And what happens is the market begins to slide and start rolling back down again. If that happens tomorrow morning, again, we can easily grab that bear trap on the way up, right? That crown reversal, the bull trap off of the measured move. But watch as it pulls back. If it begins to grind down like that, I mentioned earlier how to trade that kind of grind, right? We talked earlier about that fake out breakout off the high. If it begins to grind down there's a very good chance the bears are going to take out these big lows over here. So what you do is you draw a trend line off those lows, you mark it up around those highs, you look left, and you start finding prior swings. And guys, this could be any entry pattern you guys are learning in the free video course. It could be a bull trap like I'm showing you right here. A lot of times what happens is it'll get it'll pop up, get up above the moving average. The buyers will come in and try to keep it going higher, and we can use that failure into pullback combination pattern you guys are learning in the free video course as well. So the bottom line though is, if we end up, again, we might go all the way up and then just simply dump off of that high. If it grinds down like this becomes a pretty easy objective now. At that point now, it's simply find that channel. I love to use channels when the markets are trending back and forth like that. Find that channel by drawing off that low and give it a good whack off the top of that channel. And again, think about now where the market wants to go. The easiest way to make more money in trading is to get better at leaving a little piece open to be a runner, right? If you want to make more money, don't trade more often, don't trade more markets, don't trade more setups. Just get better at making more money on the trades that you do take. And we'll talk more about that tomorrow morning, of course, in our trade room. So at this point right now, we've got pretty much everything nailed down here, right, to give you guys a game plan to make some money for a fake out breakout, a breakout pullback, and even if that breakout pullback ends up rolling right on over. Now, the next thing is I want to talk about if we go lower here, because there are 3, maybe 4 different ways you can make money on simply that pullback to support levels below that trading range. Why don't we go grab the Nasdaq right now? I feel bad leaving the Nasdaq by itself here for too long. The Nasdaq, of course, is very similar here to the S&P as well. We're very bullish here on the 60-minute. We're running into quite a bit of resistance up here on the 60. We expect that everyone is waiting for that nice deep pullback to buy nice and low right now. And if we play our cards right, we can probably grab some shorts here off that high, right? And then double dip off of that low. Let's go ahead and grab the tick chart here now. And the tick chart is very, very similar on the NASDAQ as it was to the S&P. Basically, it's a bull market into a trading range. We have resistance up overhead. So I love the idea of that fake out breakout we talked about a few minutes ago. I certainly like the idea of that breakout pullback as well. Just make sure that we get good, clear proof of a break above that 612 and 3/4. Let's talk more though right now about the move going lower, all right? Because there's a lot of ways in which you can make money on this. The most important thing about a bull range is that levels of support underneath us are where we expect the most amount of buyers to be waiting. Now, can I sell short as it goes lower? I can, but I have to make sure I sell as high as I can, and I want to make sure I do this before I take out any of these lows. Whenever I have to work hard to sell as high as possible, I always want to use, in this case, that's a bull trap, right? Same basic idea as that crown reversal. It's that lower low in price, it's that higher high on the tape, right? And that run back down, whether it's called a crown reversal, or a bull trap as it goes lower. If we start to run lower here overnight, and if I can get that series of lower lows in price and that nice good signal coming off that trap high, that's the way you short this thing as it runs down into these lows down below us. Now, once we start getting down into support levels below, we're no longer trying to be a seller anymore. We'll take our profit on short trades off the high, and now we begin to rope in some bear traps off of this low. There are really 2 basic types of entry pattern looking for to buy off these support levels. One is going to be kind of your classic 2-try failure, right? Nice deep pullback, bears once, bears twice, right? And buy into that 2-try failure. I probably have over 100 examples of that set up inside the free course, right? So we take out some of these lows, we take out support levels below, the bears come in, they try once, they try twice, and I'm able to ultimately use their stops to fuel this move going back up into that trading range. Now, I want you to see how I draw this. In this example right now, my risk is here and my reward is way up here. Make sense? Okay. It's a good risk reward ratio. Now I want you to think about a slight variation of this. Sometimes what happens is we're going to bounce off that low and quickly begin to go higher. Same pattern now. 1 try, 2 try. How does my risk reward ratio look now if I buy it? It doesn't look so good anymore, does it? There's my risk, There's my reward. Okay, this is very important to understand because if we start to get a very strong bounce off that low, I now need to go into buy low mode and I have to buy as low as I possibly can. Now, in this case, it's the same basic pattern, but I want to get that bear trap below that low. Why? Again, think about the risk reward equation now. Risk is here, reward is there, right? Much more desirable risk reward ratio. So again, I want to buy down here, but pay attention to how that pattern sets up. If it rolls lower and we can get a good entry buying low with small amounts of risk and a big amount of reward, that's great, right? But if we have to, and it really bounces back up like this, now that's not so great. Look for that bear trap or that trap entry like I teach in the video course and do it that way. All right. And again, it's a very simple risk reward equation. I want to filter my trades and try to plan to take trades that allow me to have a much smaller risk than my reward. And the reason for that is not just because of the money, it's because we know that professional traders, there'll be more traders looking for this trade than there will be looking for the trade up here, right? Wherever you have good risk reward ratio, you're going to attract in more of the big money, the smart money in the market. If you can focus on trading along with the smart money in the market, you will undoubtedly be on the right side of the market a whole lot more often than the wrong side of the market. So keep that in mind. We look for that buy off of that low. Now, sometimes what happens is we'll get this very strong run down. They'll pull back to the underbelly of that range and they'll try to go again. Okay, these are even better. These are what we call double bottom reversals. Now, it's the same basic idea. It's almost the same exact plan, right? Again, I like the idea of buying off that low, but who knows, right? Maybe they pull back and they rocket that price going lower. If that's the case again, think about the same equation, right? Can I get the bears once, bears twice, and get a low risk high reward trade? If so, I can take a straight up 2-try failure pattern, which again, if you've taken my free video course, that should be familiar to you at this point, right? If you haven't taken the free video course yet, grab that link up top there and you can thank me later. That will get you on the right track pretty quickly there. But again, if we end up V bottoming and starting to run higher here, this is where we need that bear trap, right? Because again, same basic idea. We're trapping the bears in, using their stops to fuel this move, but I'm being more specific about the entry pattern when I have risk reward that looks like this. All right. We call these double bottom reversals. It's very simple. Strong run down. If they retest that low, we then look for one of those two variations off that double bottom. And this kind of goes right along with if it V bottoms, right? If we were to really run lower and V bottom off of that low, like this area on the Nasdaq, that 417 half level is a prior high there. You got to think there's a lot of buyers want to buy that deep pullback. Again, if we roll lower and 1, 2, get it easy, that's easy, right? But if it V bottoms and begins to grind going higher here, yeah, now not so easy to get that good risk reward ratio. We draw that trend line off the high, I mark it off that low, and again, I look left, find those swings and grab. With these V bottoms like this, I'll oftentimes grab that trend line off the high, mark that low, and then grab that beautiful bear trap, whatever pattern it is, right? But I want to be underneath that low. It could be a trap pattern like this one I'm showing you. It could be a move back below, bears come in for a failure pattern, right? A lot of examples of those inside the free trading course. The only other variation of this that I want to make sure I'm ready for tomorrow, and I'll kind of bring you along with us, would be, whether it goes up and crashes back down, or, tomorrow is CPI, it's CPI day, right? So there's kind of one other variation of this, which would be, let's say, for example, we wind up going lower and the market begins to grind and grind and grind down like that. If that is the case, remember, whenever we see a real strong pop and grind move like this, it's very likely that on that first pullback, we get another leg going lower. All right. So if I start seeing this thing, and again, I don't have a crystal ball for tomorrow. I'm simply putting together some game plans because it's foolish to make predictions, right? Go through different scenarios, get prepared technically for it. That way, if you see this tomorrow, you're prepared to make money. I do this because I want to have a game plan kind of fleshed out tomorrow morning in our morning trade room with all the members. So what you want to think about here is as the market kind of, again, if it, and again, it may go up and then come crashing down and begin grinding. But the bottom line is, if it pops lower and it feels like the bottom has been pulled out underneath this market, what I'll do is I'm going to draw that trend line. I'm going to find that channel. I'm going to look for this pop up and then see if I can get a bull trap right there, right? See if these buyers will come in and try to buy this going higher. Remember, all of that momentum is going to want to retest that low. So with these pop and grind moves like this, I'd like to get above the moving average around the high of that channel, get one of those failure patterns, and use the buyer stops to short back down to retest that low. It's a bit of an aggressive trade, but again, in certain situations, when you have that really strong run down and that grind going lower, it's almost a certainty this pullback will get sold. And the target, of course, is back down to retest that low. Once we get that retest of that low, right, if we do get that pop and grind going lower, again, I'm simplifying now, right, but if we do get that retest of that low now, who's down there, right? Who's down there? Well, first of all, anybody who sold short will likely take their profit, at least a good chunk of that profit, at that low because we're an overall bull market, right? You saw the 60-minute chart. Any deep pullback right now is probably going to be seen as a buying opportunity. So the bears who take their short off the top of that channel, which I do like that trade for tomorrow, you got to think they become buyers at that low. Right, I'm shorting that pullback tomorrow. I'm taking the bulk of that off at that low. So sellers become buyers, right, at that low. And then what do you think's happening down here? Buyers are likely going to re-enter the market because it's an overall bull market. So one of my first coaches will always say, these are scenarios where everyone is a buyer, right? Everyone is a buyer. The sellers are buying their way out of their positions. The buyers are buying because that's what buyers do. And I'd love to come in now and grab one of those. Again, that same kind of calculation, right? That same variation. Is it 1, 2, and back up? Right? Or if it V bottoms, right, and goes higher, we look for that bear trap off of that low. This could be one of the most lucrative, this trap right here could be one of the most lucrative trades of the week because it will drag us lower and put us in a great spot to buy nice and low in a very obvious big run up here on the 60-minute chart. All right, guys? Now, I know I covered a lot here tonight, and hopefully we'll get a number of those trades I talked about tonight on the video, but you know the market will throw us a curveball tomorrow. You know that news will send the markets wild tomorrow at 8:30 Eastern time. So we did our best tonight, putting the game plan together. Tomorrow morning, though, that's where all the action will be tomorrow morning in our morning trade room. I can't think of a better way to learn this stuff than to come out and trade it with us every morning, 8 o'clock Eastern time in our members trade room. I'll put all the important links once again the description of the video here tonight. I'll put the free class links. I would definitely recommend start with the free video course first, learn the basic strategy, and that will get you kind of warmed up and ready to come out and trade with us sometime soon in the morning trade room. If you got any questions or have trouble getting access to our free video classes, please don't be afraid to call or email or use live chat. If you need help, if you got questions, don't be a stranger. We're always here to help out along the way. All right, guys, thank you so much for watching tonight. Hope you learned a bunch. Hope you use this knowledge to earn a bunch tomorrow, and hopefully I'll see you sometime soon trading right along with me in the members trade room. In the meantime, though, be well, have a great rest of your evening, be nice to each other out there, and I'll see you guys here next time. Adios, amigos. Bye for now.